Good morning, my name's James Hughes, Chief Market Analyst here at Scope Markets, and this is your daily briefing on Tuesday, the 14th of July. European markets look set to follow their global counterparts lower Tuesday, with virus cases spike in a number of countries around the world. On Monday, World Health Organization Director General warned that too many countries are headed in the wrong direction. In several countries across the world, we are now seeing dangerous increases in COVID-19 cases and hospital wards are filling up. It would appear that many countries are losing gains made as proven measures to reduce risks are not implemented or followed. US earnings are also a key focus for investors today. Later on Tuesday, stateside, some of the largest banks in the US, such as Citigroup and JP Morgan Chase, are set to report their earnings. US stock futures moved higher in overnight trading and pointed to gains at the open on Tuesday. However, with mass unemployment, an unprecedented health crisis and near zero interest rates, it could be a depressing week for markets and for those banking stocks. Expectations are that losses from bankruptcies and bad loans and credit could total $2.1 trillion for the big banks in the next 12 months. Pepsico kicked off what was expected to be a rough second quarter earnings season in style. The company beat top and bottom line expectations by a good margin, weathering the thick of COVID-19 crisis very well. The revenue decline of 3% looked a bit discouraging at first glance, but most of the top line drag was caused by currency headwinds in Latin America. Excluding FX and M&A, organic sales were flat, easily topping consensus. Adjusted EPS of $1.32 fell well short of last year's levels, but justifiably so. Expenses related to COVID-19 were to blame for the lack of bottom line movement, although these challenges should be short-term in nature. Today's session sees UK GDP released this morning, and that showed that the economy rebounded in May as lockdown was eased. The readings rebounded from lows of 20.9% contraction in April to add 1.8% in May. However, it was lower than the 5% expected. Later in the session, we will get US CPI released after those bank earnings in what is a busy day on Wall Street.